I'm Owen Bigland. This is the Inside Edge video blog. Okay, latest stats package from the Greater Vancouver Real Estate Board for March just came out. I'm going to run them through here. My disclaimer that I always tell you guys, the only true source for statistics on the Vancouver real estate market, Greater Vancouver, is the Greater Vancouver Real Estate Board. They put out a stats package to the public and to us realtors, which is a little bit more robust, first 2 or 3 days of every month. Anything else you see out there on TikTok or Facebook, YouTube, wherever else, unless it's from Greater Vancouver Real Estate Board, take it with a grain of salt, because I've told you guys many times here, a lot of these stats are massaged, made up, fake, all kinds of crazy stuff out there. So this latest stats package, I've been in this business, as you guys know, for many decades. This one is got to be about the most kind of all over the road, sporadic, colluded, confusing set of stats that I've seen in a long time. In a nutshell, sales are down, listings are, sales are down, listings are up, prices are up. We're now in a seller's market, and a very strong seller's market in condos and townhomes as far as sales to active listings ratio, which is the best stat to use, which I always will close with here. The only market that's in a high-end balance market now is the detached market, and that has run a long way the last 5 or 6 months. 6 months ago, that was down. It dipped its toes into a buyer's market very briefly, only lasted a month or two. It was at an active sales to listings ratio of, I think, 10 or 11. Now it's all the way up to 18.2. So high-end balance market. I think in another few more months, the detached market will move into a seller's market. So in a nutshell here, I'll save the active sales to listings ratio at the end, because that's the cleanest stat, the one you never hear the media talk about, because it gives you both supply, what's listed compared to sales, to give you whether the market is a buyer's market, balance market, or seller's market. So I'll leave you with that one. But overall, the overall prices here, the overall index for everything, condos, townhomes, detached, continues to go up. It's up 4.5% in the last 12 months. If we break it down, detached homes, sales are down 5.4% over the last year, sales, but prices are up 7.4% over the last year. Condos, sales are also down 7.9% over the last 12 months, but prices are up 5.7%. Townhomes, sales are up 6.2% and prices are up 5.7% over the past 12 months. The funny thing is, listings now, though, are at a 6% above our 10-year average. So they've been going up. The listings are up, but again, sales are down, prices are up. So talk about all over the road here. I guess really the reason why these are so erratic here, I think, is we're really in some unprecedented times right now. I think as I speak, I think we're pretty much in a recession in Canada. I don't think the Liberals have admitted to it yet. If we're not, we're teetering on the verge of a recession here. Inflation still continues to be quite high. Cost of living is off the chains here. Of course, we've got a government that is not very business friendly. Everything is taxed to death, restricted, bigger, bloated governments. Not a good place to be, both provincially with the NDP and federally with the Socialist Liberals. Interest rates are still elevated. I know, at 7% for a variable, 6.8, we're still below our 20-year average. So historically, interest rates really aren't all that high, but it's where we've come from. We went from 1.1 variable rate to close to 7% in a very short amount of time. So what I would say is the reason these stats are so sporadic, and I know from my personal business, I've currently got 8 listings right now. I'm always selling properties, always have stuff I'm selling every month, and I'm getting new listings every month. And I'm also on the buying side every month, representing buyers. Where I see things right now from the front lines, good homes, and what these stats will kind of substantiate is good homes, good condos in good strata, downtown Vancouver, Mount Pleasant, Kits, that are priced right are selling quickly and for top dollar. In a lot of cases, record-setting prices. I know it sounds crazy. with these crazy high interest rates, or where we've come from, yes, there are new high water marks being set all the time on these high quality strata, because I sold some and I continue to sell high price marks in strata on some of my listings, but I'm also offering on stuff. Some I'm getting outbid on, that are getting some pretty crazy prices. Everything else, if it's not priced right, or maybe the location of the strata isn't grade A, triple A, chances are they're gonna languish a little bit. And I know that even from my listings. I've had several here that I've recently reduced. One I just reduced a second time. Pretty decent homes, and I'm getting action on them, but the buyers are cautious. They're kicking tires and taking their time. So it's a really kind of it's a real hodgepodge market right now. It's a very unusual market. I can't remember the last time we had a market like this. It's been at least a decade. I can't even remember. Again, where some stuff is selling quickly and for high prices, as these stats portray, and then a lot of stuff is just sitting. Listings are up, and days on market are sitting on a lot of homes. Some good, maybe some that have issues, and those tend to take a little longer to sell anyways. Let's move on to the active sales to listings ratio. This is the cleanest stat to use, the one that I always look at first, because it gives you a clean snapshot of where the market is, at least the best snapshot of all the other stats that I see out there. So just keep a quick reminder, anything under 12 is a buyer's market. Between 12 and 20 is balanced. Anything over 20 is a seller's market. As I tell you guys, we very rarely ever get into a buyer's market in the Lower Mainland here. The odd time every decade for very short periods of time. That's where the sales to active listings dips below 12. Currently, I'll give you the breakdown right now. For all properties, everything detached, attached, condo, townhouse, we're at 24%. So well into a seller's market there. Anything over 20 is a seller's market. If we break it down by property, for detached homes, we're now at 18.2. So that is the high end of balanced. As I said, we've come a long way there. We were down at around 10 or 11 a year ago, and we've been gradually picking up steam here. The way this is going, we're probably going to dip our toes into a seller's market by the summer here. That's my prediction anyways. For condos, we're at 25.8. Pretty strong seller's market. For townhomes, we're at 31%. So very strong market for townhomes. Not surprising. Townhomes are a rare commodity these days. Any good ones, are selling quick, usually getting into multiple offers. So the market, it's a bit of a hodgepodge of everything. Sales down about 5% over the last year. Prices up about 5% over the last year. Listings are up 6.3% over our last 10-year average. So again, good stuff that's listed right, priced right, good strata, good home, sells quick, top dollar. Everything else maybe languishes a little bit. You've got to reduce. Buyers are more cautious on those type of homes. Case in point, I'm always offering on condos in downtown and Kitts and Mount Pleasant. As you guys know, I've got a number of good older strata in the West End that I'm often trying to buy for my clients, either end users or investors. I've been getting into a bit of more competition on these the last 6 months. I bought a couple of them in January, one in February. I've been on a dry spell since. I've offered on a few and lost out in bidding wars. One of the ones I just lost out on, it was a nice unit, high floor, but needed a renovation, or at least touched up. It was pretty much original. I think it had been renoed a bit 20 years ago. And damn, this thing didn't get 4 offers. All 4 over asking, and 3 of the 4 subject free. We lost out on it, but that's pretty close to an all-time high price point, especially, and it definitely is for a unit that needs a reno. So that's case in point right there. Good quality older strata are starting to get discovered, and there's buyers out there for those for sure. And then I've told you guys I've got other stuff I've got listed right now that I've had to reduce here and there. A little more of a cautious buyer on those. So we'll see where it goes. A little bit of a weird time right now. It is a kind of a discombobulated market is kind of what I would call it. We'll see how it goes as we move late into spring and into summer. I know there's a lot of guys out there that still think interest rates are going up further. I see that on some of these message boards, and a lot of people don't think there's going to be any interest rate hikes at all in 2024. Well, maybe you're right. You're going against the grain there, because it's pretty much unanimous from the experts and economists, even though they don't know really anyways, but it's pretty much unanimous that, you know, they're calling for 2 to 3 cuts sometime in 2024, probably late summer or into the fall. In the US, they were also calling for, at one time, 4. Now that consensus is seeing is going down to 3 or perhaps 2. But they are calling for a couple of cuts sometime in 2024. Personally, I think we probably will get a couple of small 25 basis point drops, maybe 3 before the end of the year, and that will spur on this market more. There's a lot of buyers that want to buy, but they're waiting. Some are reading the tea leaves and getting in ahead of time, which is what I would say you should do. If you get the right house and you can get it at the right price, buy it and lock in a 1-year fixed, and then review it in a year. You'll probably get a better rate. But there's a lot of buyers out there that do not want to go there. They're going to wait until at least that first cut or two, get some sort of a green light, I guess, before they decide to get into the market and commit. I'm Owen Bigland. As always, thanks for watching. I'll see you next week.